Hello and welcome to Crypto Weeklies. Today is essentially a down day in the market. Most of the cryptos are down as referenced by this performance heat map available on cryptoweeklies.com. Link on the bottom of your screen under this heat map section. We are watching at the 24 hours performance barometer. Most of the names are down over the last 7 days as well. Again, not financial advice. This is just analytics of what the crypto price performance was. Over the last 7 days, only BitTensor and Uniswap and Maker have been able to make some notable gains, but largely, again, most of the cryptos are down or flat. Over the last 30 days, similar story with only two names up of the major 50 cryptos, BitTensor and BNB. Over the last 90 days, BNB and ETH are up ever so slightly, and Sol basically flat, but the rest is negative. Even Bitcoin is negative 9.57% over the last 90 days. So this brings to attention what is happening as in the asset class as a whole. If you look at some of the narratives right now, most of the market is engulfed by the bearish narratives as established by this social media narrative word cloud. This is available under the narrative cloud section of the website. Again, this website is free for all. So these narratives, as you see, are the last 7 days worth of term frequencies on popular narratives on social media platforms such as YouTube and X. The bullish narrative has died down compared to the bearish narrative. The market and the analysts or the discussions on these platforms are more bearish than bullish. Apart from Bitcoin and Ether, again, not much altcoins related narrative right now. Even XRP and other major cryptos and their narratives are dying down as it stands right now. So the bull market completion has it again, unfortunately this time around the highest risk that we went was in December 2024, close to that 0.6 on the composite risk score. Since then, again, the risks have died down completely, and now the latest print on this bull market completion or composite risk score is 0.37. That means we are entering the cool off period as it stands, unless there is a major move to the upside. The green zone is usually typically a dip buying territory, but again, as we move into the middle of quarter 4 of 2025, this cool off period is typically different from what happened in the last cycle, where in May there was a risk on period where the composite risk score was greater than 0.8. Even in early November 2021, the composite risk score was greater than 0.8. Now we are reeling in 0.4 territory. So kind of dissimilar from the 2021 cycle as established by this bull market completion or composite risk score analysis. Again, you can check out how it is calculated using the description on the bottom. The way to find it is under the peak value analyzer. The crypto TLDR 24 hours worth of news sentiment. Again, these are the popular narratives over the last 24 hours and classified into bearish, bullish and neutral using by using machine learning model trained on crypto based bird based narratives. The overall sentiment is still, again, over the last 24 hours is slightly positive as it relates to these crypto news. But you can see a large number of red narratives or the bearish narratives popping up here and there. The 20-week simple moving average price-based risk on Bitcoin and ETH has dropped down quite significantly from especially for ETH, from 0.86 in middle of August, now close to that 0.4 or less than 0.4. Bitcoin, on the other hand, is at around 0.23 risk. Whenever Bitcoin is below 0.2 risk, that is in this lowest risk regimen, that's when the best deals in terms of the DCA, historically speaking, occur. The major presence in June 2022, again back in April 2025 and August 2024. For a handful number of days or weeks, if Bitcoin and ETH both are in this on struggling on their 20-week simple moving average, and fairly low on risk on that time period. And if that coincides with, let's say, in a non-bear market year, that also again highlights if there is a great entry point. Right now, again, ETH risk is at somewhere close to 0.4, BTC risk is close to 0.2. Just wanted to highlight that. In terms of the risk meter on these individual asset, as they look at their own composite risk journey between 0 and 1, BTC is at around 0.42 risk, ETH is at 0.53 risk. So the other assets again are here or there, but again you can see none of them are in this. Again, most of them are not in this blow off top regimen. The ROI for this year, if we were to look at 2025, Bitcoin ROI for this year is only 14% from the yearly open. The highest BTC event is only 32% from the yearly open. Compare that to 2021, quite a different story. You could say that this time, even in the last quarter, the performance for BTC has not been that great, comparing that to 2021. In 2025, again, ETH and BTC are heavily correlated, as they are during the post-halving rally. But again, now they are moving quite in unison, even in terms of the magnitude of the moves. The estimated bull run target, again, as it stands today, again you can check it out on the banner itself. The base case is also at around 155,000, whereas the current price action of BTC is again much lower than that, at 105k. So again, about a $50,000 difference between, or 47% difference between the current price and the base case scenario forecasted by these risk-based models. As we move closer to 2026, the non-euphoria bull run peak in 2025 becomes less and less likely to happen. Again, the non-euphoria bull run peak is forecasted for December at around 142k, whereas the euphoria peak is at around 174k. As we move further into, let's say, November, December territory, and if Bitcoin has not rallied till then again the likelihood of this euphoria ceiling to be achieved in the weeks gets capped quite drastically. So for example, if we are 3 to 4 weeks in November, or so, then we have only 1 month of wiggle room, and again 1 month from now the euphoria peak is at around 145k, whereas 2 months or 3 months from now the non-euphoria peak is at around 145k. So that's how, again, the timing and seasonality affects these price forecasts. So all in all, again, not a good period, especially as it relates to some of the major assets over the last 24 hours, as well as over the last 7 days and 30 days and 90 days being essentially down only. That signifies a cool down in the market. If the momentum were to be picked back up in the short term, then the shorter term targets for BTC and ETH especially are established, again better analyzed by this 20-week simple moving average price based model. If that kind of a peak somewhere between 0.6 and 0.8 were to be achieved by BTC between 133k and 140k before a cool off. Similarly for ETH, the SMA based 0.8 scenario, where the peak is close to $5,500 for ETH in the shorter term. With that, I would like to conclude the video. Hope you enjoyed the content. If you did, please give a like and subscribe, and check out these charts on cryptoweekly.com. Hope you have a nice day. Thank you, and see you tomorrow. Bye bye.